This video is about what I actually am saying. There's been some confusion. I'm going to tell you exactly what I see playing out, in my opinion, 100% of my opinion. And we are at the turning of the tide here. This could be a really, really important time for you to make certain decisions now. So I'll tell you what I actually am saying, and I'll tell you what it means for my career if I'm wrong. But more importantly, I'm going to tell you what it means for you in the event that I am correct. I'm also going to give you 8 specific steps in order you can do to land on your feet, better yourself, and maybe take care of the people you care about and have some purchasing power on the other side of all of this.
Everything mentioned in this video should be considered opinion only and not personalized investment advice.
So yes, it's going to be a long video, granted, but it took me a lot longer to produce it than for you to watch it. So please do me the favor, just invest a few minutes at this incredibly important time in the world to see what I am saying might happen. And I better do it now before I forget. This is 100% my opinion only. I am wrong 100% of the time, and you need to make your own decisions, gather your own information, absorb it the way you want to absorb it, and live with the results of the decisions that you make. This is all for entertainment purposes only. Having said that, I'm going to tell you exactly how this is going to play out. So here's what I actually am saying. And I'll start with a really easy one that you know to be correct so that you get an idea of where I'm going with all of this. It starts with the debt levels across all strata of ways that debt can be had. Municipal debt, personal debt, corporate debt, governmental debt for the whole federal government, statewide debts. And all of these debts, which are brought on by low interest rates, partly from fiscal irresponsibility, will only grow unless we dramatically change our privileged approach to taking on debt and getting more debt and taking on more debt. The entire economy is held up right now by the ability to take on debt, and it's based on the Federal Reserve backstopping everything. Any of that goes the other way, the whole thing is under a lot of strain. And the sad part is that the political setup that we have and the governmental structures that we have makes fiscal responsibility an impossibility. There are artificial influences giving the stock market a natural long life. And I'll say it right here. I'm not saying the stock market will not increase in price. In fact, I believe that is the way it's going to play out. And that's also a demonstration or manifestation of the weakening of the underlying economy. Just like when we see hyperinflation in some nations, just like when you see the economic structure of society starting to crumble, you always see the stock market going up first. The stock market level is used as a way to make people feel better and distract them from what's really going on. And it's also a reflection of the unfair situation where some people are taking on more and more and more, while others have no way of stopping them and have no benefit as they gobble up more and more and more. That's the situation we're in right now. And these artificial influences, which will go away, have increased income disparities. They've adjusted the proper understanding of the way an economy works. And inequality is only getting bigger and bigger and bigger as a result of the situation we're in. We've been dealing with irresponsible monetary creation. We've seen low interest rates absolutely ballooning debt levels and the amount of debt that corporations and people are willing to take on or are capable of taking on. At the same time, anything to do with the stock market, short-term experiences over the last number of years have been nothing except for positive. And that in itself is what gives rise to the expression of don't confuse a bull market for brains. There's been nothing but great results so far for a very long time now. And that's usually what encourages more and more people to get in to try and get some of the gains. And they start throwing their money into it and driving up the prices. And the prices go higher. They think they're doing great. And that sets up a massive portion of people who then, when things turn the other way, if they're leveraged, which a lot of investors are leveraged now, using borrowed money to buy more stock, a lot of them are at significant risk. It's not about losing the money you invested. It's about losing more than the money you invested. And it happens in an instant when it happens. When am I saying it's going to happen? I'm saying it is going to happen. This stock market should have come down 2 years ago, which is what I said 2 years ago. Bubbles can get bigger. Delusion can go further. That's the way it plays out. And people mistake that, and they think that that means that the economy is doing well, or the stock market will be going up and up and up, or that the Federal Reserve can actually control stock markets going higher. And while the prices can go higher, that is actually with dollars that have less purchasing power. And that isn't clearly understood by people, that they're not getting wealthier. And part of this, you saw the rise of Robinhood, where a lot more investors are coming to invest for the first time, which is very similar to what happened in 1929. There's a big ramp up of the number of retail people who are going to be buying stocks. Now, this is what's happening now with Robinhood. A lot of people who wouldn't have been in the markets are getting into investing in stocks. And of all the stimulus checks that the government's sending out, something like 46% of those dollars went into the stock market. So you've got the Federal Reserve buying the bonds of corporations in the American stock market. And then you've got retail investors taking money from the government and buying stocks in the stock market. So you've got the Federal Reserve basically buying stocks with two hands if you travel down the rabbit hole the whole way. And you must know that we've lost a ton of manufacturing jobs. And people think it's going to China, and a lot of it is, but a lot of it's going to automation, and we are, as I say, stealing the jobs from ourselves. We're making the companies more efficient, and so therefore they make more profits. And if they buy back more shares, and the stock price goes up, and the Federal Reserve's backstopping all that and buying up their bonds and their junk bonds even, and it all manifests as a widely increasing trade deficit, which will only get worse and worse until we change the way that we think about fiscal responsibility and developing an economy or building a nation to produce things that other nations want, so that they're going to give us stuff that then we make a better life for ourselves because we're providing value to somebody else. So besides these trade deficits probably going to grow endlessly until we figure out how to fix this, you've got foreign nations reducing the amount of debt that they owe in US dollars, or that they own in US dollars. And a lot of countries will have US dollars in their account because they pay for things with US dollars. But there's a shift in what kinds of things are being paid for with US dollars, and there's less reliance and need to hold US dollars, so they get released, spent by the country, converted to other currencies, used for other things, and some of those dollars eventually are released back into the wild, and they absorb their way back to America, and that's going to fuel inflation even more. There's inflation now because there's inflation, but there's also inflation now because of supply chains being scrambled, disruptions, lack of goods, and now there will be inflation because of all this money that other countries are releasing into the wild. And with this, there's alliances which are shifting. You've now got Russia providing oil to China, and China's buying oil from Russia not in American dollars. A lot of countries are now changing who they're allied with. They're changing how they're paying for things. And the big loser in all of that in each situation is almost always the US dollar. It's only going to be declining in relevance and use and demand going forward. Meanwhile, more and more nations are becoming what I would describe as tough enough. What does that mean? Tough enough. I'm not talking about that they'd be able to defend themselves in a nuclear war so we can't do anything about them. I'm saying that we're in a situation where it's going to be a minuscule thing that happens that could be a risk, where two fighter jets are flying too close to each other to try and intimidate each other and they clip a wing, or a boat goes too close to the wrong coast. You're seeing that there might even be a war between India and China, let alone China and America. And so that's how some of the alliances build up. You're going to have us being closer with the military of India because it's an enemy of an enemy who's our friend. So now we're in a new Cold War with China, and those trade war tensions will only get worse. The Cold War tensions will only get worse. We're going to have inflation across the board at the same time. Not that it's related so much directly, but that was just the order it was on my list on my page here. And you're hearing about the numbers of jobs that we're getting back. And more important than the number, I always tell you this, more important than the number is the mix of jobs. I was looking at the job report this morning. And by the time you see this video, it'll be a few days older. But the jobs report this morning: retail workers, bus drivers, Teachers, nothing wrong. Hey, I'm not saying anything. Everyone gets mad at me. Don't do that. Bus drivers, restaurant workers, teachers, construction. A lot of, no offense, but a lot of lower level and more easily replaceable jobs which don't help you get out from underneath the situation that they've put on top of you and the debt load that you have, only some of which was your fault. And some of it was, but most of it wasn't. What you'd like to see in a jobs report is a mix of jobs of increases we get and the higher level jobs, the jobs that we can then make things for other countries, really high technologically advanced things. And you guys know how I feel about real estate, which is the biggest investment most people have. And when the real estate prices go up, they feel a lot more wealthy. And so they'll spend more money, they'll be more active. And even so, you've seen the velocity of money, I won't even say fall off a cliff, like it just doesn't exist anymore. And as real estate prices do decline, people's most valuable asset declines in value. That's going to change the way that they think about things. It's going to change their perspective on investing in the environment and their own personal wealth, and therefore the decisions that they make. Meanwhile, you have pension funds that are completely overstretched. A lot of pensions will earmark or they'll build into it that they're trying to make a certain amount per year from stock market investments. They have to make 6%, for example, per year, and they factor that into their calculations. Lately, the stock market's been cooperating, so they're able to meet their obligation levels and hit their goals and targets. If and when the stock market starts going the other way, it changes the entire calculation. And a lot of these pensions, people don't realize, are so overstretched right now with the markets doing this well. I'm not even going to insult you by explaining what happens if the stock market does not continue on the current trajectory that it's been on for the last several years. The detachment between the economy and the stock market is just complete now. It's just two different things. But there are several warning signs for stocks, specifically about the stock market, that I'm going to tell you, and I'm going to do them as rapid fire comments because there's so many of them. I'm just going to run through them really quickly. When any of the artificial influences lifting the markets higher fade away, then there's a lot less push higher and a lot more pull lower. And just before I get into a couple of these rapid fire points I want to make, just remember I'm going to tell you what it means for my career if what I'm saying is wrong. And I also want to make sure to drive into your head what it means for you if I am right about all of this or some of it. Plus, then I get to the most important part of this video. 8 specific things in a specific order you have to do. You don't have to do anything. I'm not telling you to do anything. 8 things you can do to better yourself, put you in a better situation, to land on your feet on the other side of what's about to happen. I told you about the little known indicator where companies which are raising money through stock issuance, the ones that are companies which are not profitable, are raising more money than stocks which are profitable companies. That's happened only 3 times. And it's happened before the dot-com bubble, it's happened before the global financial crisis, and now. And the CAPE ratio, which is a reflection of price-earnings ratios, but more over a decade rather than a year kind of thing. Not exactly, but whatever, it doesn't matter. The point is, the CAPE ratio is at 33.6. That is the highest it's ever been, except for one other time, right before the dot-com bubble burst. Now there's the Q ratio also, and that can be done on a company-by-company basis, but in general, the main Q ratio. You take the value of all the stocks on the market, and then you compare it to the value to replace all the assets of those stocks, of those companies. It's gone above 1.0 only when there's been a big follow-on stock market crash, a big one. It's a warning sign if it gets up to as much as 1.0. Right now, it's at 1.7. And just as an aside, from a personal perspective, all of this could be fixed if we had true capitalism. We don't have capitalism anymore. It's not actually capitalism. It's some kind of altered thing that used to be capitalism, but it isn't. It's being destroyed incrementally by a long, long string of people making what they believe to be a good decision, either for themselves or for the economy. And then you just have all these different decisions incrementally coming in from every angle. And then this is what the result is. And that's why I say it's not capitalism anymore. You can't bail out certain companies and not others. You can't run an economy with a bunch of temporary influences. This ends, in my opinion, one way, and I hope I'm wrong. And please don't do the thing where you assume that because I'm saying this that I would cheer for it or want it to happen. Because the way I'm seeing this, if I am right, it's going to be very bad for everybody. If I'm wrong, it'll be bad for me. But at no point would I ever want this to play out as I believe it is going to play out. I've actually painted myself into a really dangerous corner here where either I'm wrong or I'm right. Either way, I'm moving to Canada. This once in a millennium setup has us poised right on the edge of the cliff. What cliff? What cliff am I talking about? I'm talking about a cliff in the stock market. I'm talking about a cliff in the economy. I'm talking about a cliff in employment. I'm talking about a cliff in opportunities. I'm talking about a cliff in the confidence in the US dollar. There's a cliff for real estate prices, savings rates, the amount of money you can gather together in case of an emergency. It's a cliff in economic optimism. And we're facing this all underneath the umbrella of this massive debt bomb. And so what does all of this mean? What am I actually saying? Based on what I'm looking at and what I've seen, I can only assume that we are about to enter what will be the Greatest Depression. And what if I'm wrong? That's an easy one. It'll be devastating for my career and the confidence people have in what I have to say. But I will still be walking around with my head held high because I only and always told you 100% what I truly believe with no hidden motivations was going to happen. And not only do I tell you what I believe 100%, but I also act on it. But here's the really dark part. What if I'm right? Open your mind to that. What if what I'm saying is going to happen? And maybe you even see this yourself because you see all the same stuff. It's clearly evident. What happens if I'm right? There's a lot of things you have to consider then in that case. Number one, we're going to roll right into default town, which we've already seen a big default train wreck, but it'll be so much worse. There will be so many defaults like dominoes. Each will have its follow-on effects or its counterparty risk that then they get hit too for you not paying a debt. The person you're going to pay the debt to or that you owed the debt to, that money goes as a write-off or a loss. And when that happens, then it's just going to be dominoes one after the other because there will be all these different sources of debt that were there that suddenly turn out to have never been there. You had all these sources of debt and liabilities and money that is owed, which all of a sudden, that's just a dead end. There's no money there. So the person doesn't pay the money because they can't afford it, and the person that they're paying the money to does not get that liability satisfied, so they take the loss. I believe that a lot of bad numbers, and I'll say it this way, I'm not going to say that they're going to get even worse or that they're going to get more bad. There's going to be a lot of bad numbers that are going to get absolutely awful. And of course, I'm talking about homelessness. That's blatantly obvious now. You're going to have less ability to gather some emergency money. There's more food insecurity. There'll be more hunger, income insecurity. Debt to GDP ratios for individuals, for countries will get unsustainable, and they're already pretty bad. And all this money that is the answer that we're creating to pay for all the stuff that we spent, such as soldiers, teachers, bus drivers, a lot of that money is not taxation revenue, which is the way it should work. A lot of that money is money that we created, that didn't exist not too long ago. We've printed more money more quickly now than anywhere ever in the history of mankind, which means you're going to see a massive uptick in suicides. You're going to see a massive uptick in certain types of civil unrest. Maybe you see more road rage, but you'll see a lot more thefts and burglaries. But I want to talk to you right now about helplessness. And what that means to me, helplessness, if you have elderly parents that you're going to be taking care of. And all of a sudden, the inflation is taking too much of a bite out of their pension, or they don't get the pension that they were expecting, or their pension is based on a lot of stocks in the stock market, which almost all pensions are. And then that's going to put them in more of a difficult situation I call helplessness, where they don't have the food they need. There's no money there for it. And I'm not saying this will happen, but if it does, what are you going to do? That's all I'm saying. Like, think about these things, because then it'll be a different situation when it does, if it does happen. And one of the worst parts of all of this is that it makes it easier to do things which might not have been possible in a more calm kind of environment. Like the Patriot Act after 9/11, what we're going to have is the Fed coin digital currency, and they'll implement it, and it'll get away with it because no one's going to stop them, because it's something that has to happen at a time where there's a lot of commotion going on. No one's going to get in the way of that. They're just going to let them do it, and that's when they're going to act. This greatest depression will have everything the original depression had, only now it'll be in full color with a bunch of teenagers filming the whole thing on their smartphones. So what do you do about it? If we're just complaining here, then we're just complaining here. That's not what's going on. If you don't give a solution, then you're just part of the problem, right? Here's 8 things that I believe could help you land in a much better position and actually have a far less detrimental experience as we go through what is going to be the lead up and passing through the greatest depression. And as always, do what I do. You hope for the best, but you plan for the worst. And if the worst never happens, you won't hurt yourself by preparing for this. Number 1, do an audit of your personal situation. Put it on paper. Put it on a spreadsheet so you can see it. How much money do you have? What are your liabilities? Where does your money go? How much are you making? Who is your responsibility? Who are you responsible for? Where will their food come from? How much debt do you have in comparison to your income? If you're making $50,000 and you have $80,000 in debt, that's manageable. That's okay. If you have $200,000 in debt, but you're only making $50,000, your debt to GDP ratio is not sustainable. Where are your investments? How secure are they? Where are you holding them? But most importantly now, look at your entire personal audit from the perspective of what happens if the mud hits the fan. Things change. If you've got a certain amount of money in stocks and all of a sudden it drops 10-20%, then your snapshot of your personal audit completely changes. And that might change the decisions you make and the way you need to prepare for and set up for what is to come. And always educate. This is number 2. You have all the tools you need to learn everything you need to know. You have the internet. Educate yourself. Watch videos. Watch serious professional videos. Read books. Take the time and effort. It's going to make a big difference. If things go one way, people who are preparing and educating themselves now, when they have all the information that they need, those are the people who will come out of the other side of this in a better place than they otherwise would have. It'll be a little bit of work right now for a lot of benefit down the road. Educate and monitor your situation. If you have your amount of stock market investments and how much income you're making, etc., monitor it, keep an eye on it, prepare for it, and consider things like what happens if you lose your job. Because some people do lose their job. And a lot of times when someone loses their job, they didn't expect to lose their job. They thought their job was secure. So if your first instinct is to say, I will lose my job, that's not what I'm asking you to do here if what you want is to be prepared for any eventuality as we go through a very difficult time. What happens if you lose your job? How would that change your entire outlook, your entire calculation? Now we get into the good stuff. Number 3, imagine where you want to go. Your snapshot, your personal audit tells you where you are. Is that where you want to be 3 years from now, a year from now? Where do you want to be a few years from now? Imagine the destination, and you're much more likely to get there. I talk about that in my new book, one of my new books, Upthinking. I talk about imagining where you want to go, and then it just becomes, you get pulled to that point once you identify all the details around the edges. But number 4, this is related to how so many people became millionaires in the Great Depression. This greatest depression is going to make even more millionaires. And a big part of that was about keeping an eye open for potential opportunities. As we go into the greatest depression, then there's going to be a lot of things that decline in value significantly. So maybe you've got your eye on something, a house or a rental income property, or you want to buy a business or the business's inventory for pennies on the dollar. Understand what those things will be down the road if their price suddenly drops significantly. Kind of like if you want to buy a house in Puerto Rico, wait until the next hurricane. Then you go buy the house. You'll get it way cheaper. And that's kind of what we're talking about here. We're going to roll into what is going to be an economic hurricane. So if you're ready and you say, okay, well, when it hits, that's what I'm going to buy, that. And then you move in right when it's not valued, when nobody wants it. Kind of like with silver right now. The world, there's a few people who stack silver. That's a small percentage of people compared to how many people eventually will be rolling into silver and gold, precious metals, hard commodities like that. Right now, we're just dealing with the small early adopters. That's about 5% of people usually. And then when it comes back into people's awareness, there's a big flood of people moving into that asset. You want to be in that asset before that motion or that movement happens. You own silver already, then all of a sudden silver becomes known and recognized as it always does over time. And when it goes higher, then you're already invested rather than trying to compete with the crowd as they're all buying at the same time. That's why it's so important to get positioned now. And that includes things that you want to buy if the mud hits the fan. I have relatives that own entire city blocks. They couldn't afford a city block until they could. Number 5, prepare with what you need right now before everybody else is also trying to do the same thing at the same time. For example, what happened in the Great Depression? A lot of people rented out rooms in their house, extra rooms in the basement, the attic, whatever. If that's what you're thinking you might want to do, then you're going to want to set up that apartment now, because when everybody else is setting up at the same time, you're not going to be able to find toilets and drywall and everything else that you're going to need. Maybe you have an acre of land and you divide it into eighths and rent out each eighth of a parcel. And if they don't have the money to pay you for their eighth of a parcel, they can give you some of their crop. Think more creatively about this stuff. It's going to get awkward, strange, whatever, but there's ways you can do things you can think about that will actually make a big difference. That right now they seem kind of weird, but if what I'm saying is going to happen happens, then this won't be so weird at all. And it might mean the difference for you between survival and not survival. Another example is to buy gold while you can buy gold. It becomes hard very quickly sometimes to buy gold when everybody else is trying to buy it at the same time. It's an inventory thing. So right now you could buy gold. You don't know a year from now that you'll be able to at any price. And I talk about this in Upthinking. I say, ask an 80-year-old billionaire lying on his deathbed about how much money can help you at the end of the day. And he will explain it to you. Only notice hard assets. Things like Bitcoin or Ethereum. I wouldn't touch any of the altcoins. But also hard assets like rental income properties, land to grow food, precious metals, owning things that you have in your hand. And if you don't have land to grow food, find somebody who does and make some kind of deal with them. Or at least open your mind to that, because there will be a time where that might matter a lot. And number 7. Now, you go to number 7, you expand your network. That means besides your children, your parents, who else is in your network? Your friends, your cousins? You want to help them too, because it might come back to help you. You might get paid back from that, but do it altruistically. Just try and help them for the sake of helping them. But you want to open them up to the realization of what's happening. Because a lot of people on the news are telling you that everything's going so great, but they're not looking under the hood. I'm the economic mechanic. But listen, when the student's ready, the teacher appears. So you don't try and drive it down anybody's throats. You don't fight with anybody. But you just gently allow them to learn from themselves that maybe how they think the economy's going isn't. And so therefore, they may do better by preparing now rather than 2 years from now. And the last thing you want to do, number 8, consolidate and gather. You bring at least a couple $100, at least cash, put it somewhere in your house, hide it in a drawer somewhere. In case banks aren't giving out money, in case it's difficult to get cash. You'll always be able to use cash even after they implement the digital currency. You'll still be able to use cash on a one-to-one basis when you're negotiating with somebody, maybe your neighbor. Cash will always be cash, will always have value. Just understand, as it loses value, that happens incredibly slowly. So you don't have to worry about having a few $100 sitting in a drawer for a while. Especially as you're going to start transitioning to a digital currency, you don't know how all this is going to play out. Nobody does. So it doesn't hurt you to keep a couple $100 extra lying around, put it in a book on your shelf. Maybe you never use it. Go get your precious metals, if you have any, out of the safety deposit box at the bank. Don't necessarily keep it at your house, but keep it somewhere secure where you know where it is, where you're not going to lose it. Make sure you have a little bit of extra fuel. Fill up your car, have a little bit extra in case of need. I'm not going to go so far as to say buy more ammunition. A lot of people will do that. That's not sort of the way I approach things. But you do want to consider preparations of all of that kind of stuff. Like I said, you want to get, if you're thinking about getting a security system, do it now. Now's the time to do it. There may be a time coming up where there's a sudden demand on everyone to get a security system. Just do it now, have it up and running so that you can gather what you have in wealth and keep it near you and keep it secure. Now look, guys, a lot of this is about just opening your mind to the possibility. If you do just that, it'll make a big difference. Because everyone's just saying, well, no, I saw in the news this, so that means that, and the Fed's got your back, and et cetera, et cetera. The people in power are saying it's so fine and strong, and look, unemployment is going down. And that's about the mix of jobs, I told you. And it's also a warning sign if it gets too low. It's not good for employers to have low unemployment. But on every level, even macroeconomic, there's so many very tumultuous tides in the world right now. This is the most important time for you ever in your entire life to consider possibly preparing in the event that everything I've been saying is going to play out. It's all about focus. As your focus narrows, it becomes more powerful. When you realize what you need to do, as opposed to want to do, you will have near total clarity of your decisions. Most of that clarity comes via a decrease in the total number of viable options.